Saturdays are for the boys.
Yeah, they
Oh,
Um,
they always are.
They always are. And we got a special guest today, the Giga Chad, Icono Cap,
But
also my brother.
What
And
up? What up?
welcome, Chris.
I was-
Welcome to the Thunderdome.
I was gonna ask where Giga Chad came from, and then I looked at him.
Come on.
That beard is dialed in.
Oh yeah. I made sure to get nice and pretty for all you.
Oh yeah.
Carved by the Bitcoin gods themselves.
If anyone feels like donating a Giga Chad, just drop it in the chat. I don't know how any of this works. I actually don't know what I'm talking about.
Smash that subscribe button.
Yeah, just throw me a Giga Chad or two.
Yeah, real quick, everyone. Make sure to quietly assassinate that follow button, and then murder in cold blood the subscribe button, and then hit your primes in a very inauspicious gaslighting way.
Your Optimus Primes.
Yeah. Give me those Optimus Primes. Oh yeah, it actually worked. Larone's here.
We got her, guys.
We got her. She
Yeah,
finally
she made a
followed. Oh my god. I wondered how many voice chats we needed to do before Larona followed me.
The answer is 58.
I guess so.
This is a good one. There's been a lot of questions, a lot of uncertainty in terms of what the hell are we supposed to do with our monies and our NFTs. So
Yeah.
we're I think very anxious to be disappointed by all of your advice, Chris.
Yes. Are we like officially started here? Like, what's
We're
like,
on stream.
We're on an intro.
We're good to
This
go.
Yeah,
is
I get
it.
that.
So
Cool.
tell us a little bit more about yourself and your background, so people know that
Yeah.
you're semi legit, and then we'll go.
Yeah.
into
So yeah, I'm Chris, Ryan's brother. I've been a financial advisor for 10 years now. So the entirety of my adult life, basically. I was working for the man for about 9 years or so, and then recently left a year ago and started my own independent firm. It's technically called an RAA, which shouldn't matter to anybody, but so I'm a investment advisor, registered with the SEC. My firm is registered with the SEC, and we have what's called a fiduciary duty, heavy on the douche, to do what's right by our clients. We're legally bound to do what is right by our clients at all times, which actually isn't a legal requirement for a financial advisor, which sounds like it should be, but it isn't. So there's a 99% of financial advisors that exist don't have that legal obligation to do what's right by their clients. So we decided a year ago that's what we wanted to do, and do more customized work for them. And we mainly work with individuals, some small businesses, on just what to do with their money. So I have also what's called a CFP, so I'm a certified financial planner, which is just like a higher standard of advice and degree of advice, and you can't start a firm like mine without having one. So with that comes all types of questions, and we're working with a lot of different types of people, and NFTs, cryptocurrency, collectibles, that's everything that people are asking about right now. And so we've been working really hard to be more equipped to answer those questions and how to help them, like, what the hell do I do with all this stuff, and how does it work? So I'm excited to talk about it.
Sweet.
That's
How many of
awesome.
those acronyms did you just make up?
Which RA, CFP? I have more.
We want all of them.
Alphabet soup. Yeah, all my friends usually make fun of me for my LinkedIn bio is I think it's like 85 letters. Just
The alphabet.
yeah, just throw a trademark symbol next to it. It's legit. So.
Perfect.
And you know you're not lying when you got the collectibles right behind you too. That's
Yeah, man.
that's legitimate.
This is the golden. This is the golden child.
Oh, baby.
Macho Man Savage right there.
Shit.
Have you listened to his rap album?
No, can we do it right now?
We might get like copyright struck. It's a legitimate rap album, but it's so good.
Get out of here.
Yeah, you got to listen to it. Here, I'll find it so I can link it to everyone. It's incredible.
There's actually like he has like a baseball card because he was a baseball player before.
I didn't know that.
Really?
Yeah. Yeah.
Wow.
That's crazy.
Let's just talk
What was
about
his name?
Macho Man the rest of this. I
Deal.
think we're good.
Yeah,
right?
I'm already moving on. I have severe ADHD, so I'm off.
My favorite song on the album is called "Be a Man," and it's a call out song for Hulk Hogan. And he spends 3 minutes calling out Hulk Hogan.
Incredible.
Yeah.
How did I not know about this?
I don't know. You guys will love
Randy
it.
Poffo.
Unreal.
There's the link.
Well, just to pull us back to reality, even though I really would love to go down this rabbit hole, Chris and I have ourselves have invested in a lot of collectibles, but as I've been diving into NFTs and talking to all of you fine people, I've realized there have been a lot of bits of advice that have been shared on Twitter and otherwise that I kind of cringed at because a lot of things weren't true or a lot of people were just sort of making large assumptions. So we thought that this chat, just to sort of encapsulate this conversation a little bit better, this is obviously going to be US based criteria and advice. We're not really addressing outside of the US. So to our foreign friends, we're sorry. There might be some common misconceptions in financial advice that will hopefully be helpful to you, but in large part, like the tax-based stuff will be US-based. We will go over taxable events for NFTs and crypto, and then we'll also take questions in the chat as well. So if you have questions, drop them in the chat. We'll try to do our best to get to as many of you as possible. There's probably going to be a few topics, because Chris and I have been chatting. There's a few topics that need a bit more research, and it would be not smart to give advice when Chris doesn't have had the time to research certain topics or talking points. And then, we'll go over some of those misconceptions and then financial advice as well. But from the top, Chris, I think you wanted to make some analogies that were easier for everyone to follow, as opposed to thinking deep into crypto and all that nuance.
Right. I think before that, some disclaimers about my expertise is what we do every day is two things. It's investment advice. So we manage client portfolios. Whether it's for retirement, for short-term planning, whatever it is, that's like our main bread and butter. So like investment-based advice we can talk through today, and that's global, like best practices for things like that, so that if someone doesn't live in the US, this advice will still apply to them. And then on the tax side of things, we're working with clients on money management all over the place, and income tax planning is one of those things, but I'm not a CPA, so my tax advice is all I know with 99% confidence, but we don't prepare tax returns, and I always end up referring to a CPA for more complicated issues. But what I found is if we prepare our clients well enough and we know their situations, they're going to be better off going to their CPA with the questions that we're telling them to go with. Because in my experience, a CPA is generally just more of like a order taker. Here's my return, just process this for me. And there's not a lot of critical thinking there, which is frustrating, because you want them to say, hey, you should be considering this or asking more questions to help you out, where it's more when you're doing tax returns, it's very simple. So with those disclaimers, I think as we're talking today, I just wanted to make things maybe a little more easy to digest if we just stay consistent with some comparisons. So if we're talking about NFTs for tax purposes, I'm probably just going to use like trading cards, for example, like collectibles, because that is the most I would say most easy and understandable comparison to make with them. And then if we're talking crypto, I'll probably just use an example of let's say Facebook stock, and it'll make sense at some point, but I wanted to kind of have examples set so that it'll remain consistent throughout our questions. So
okay, that sounds good.
So like for example, a misconception around NFTs is if you purchased an NFT, that's a taxable event. So for an easy comparison, it would be like selling Facebook stock to buy a trading card is pretty much the exact same for tax purposes as using Ethereum to purchase an NFT.
That's
Even though like one seems very much like a lot more work and one seems easy, like it's more like a transfer where it's actually, no, you're selling one thing to buy another thing, which then restarts from a tax standpoint. So you have to pay taxes on the thing that you sold, and then you convert that into buying something else, and then it starts over from there. And then if you sell that thing, the NFT or the trading card, for a profit, then you'll owe tax on that as well. So there's a lot more taxable events than I think people realize. So just an easy example, I think, to start that off.
How do we not pay taxes?
I mean, you don't have to. They'll find you.
Yeah, that's fair.
And that's going to be a tough one, I think, for this conversation. Is, I went on a screen share with Ryan earlier this week. I was like, maybe we should just use you as a guinea pig and go through all of your transactions and organize them for taxes. And then he showed me within 6 minutes. I was like, fuck this. This is not possible. Because I don't understand as much of how much you guys are buying, selling, trading. And it's going to be difficult, but the more you track, the more prepared you are. So I think that would be my one lesson is not worried so much about like reporting every single transaction or dollar to the IRS, because they probably never find it, because it's so complicated. But just be prepared. And, if that day comes, like you have your receipts, you have your, not physical receipts, but like receipts of the transactions, obviously, and just have your house in order so that you can answer those questions if they come.
That makes a lot of sense. Because that's what most people do with their taxes if they're running a complicated business anyways. They gather as much data as they can, they get everything as in a row as they can, and then when they file, it's pretty close. But then if they get audited, that's when they like really go through with whoever's auditing them and like figure everything to the dollar, right?
Yeah, and that's if you're basically not doing it on purpose, like avoiding taxation, there's no penalty other than like you'll owe some money that they find and then some interest that they're gonna make you pay. So the risk that's the risk for them. But if you're if you're fraudulently trying to hide income from taxation, that's going to be a different story. But if you're doing your best and you miss something, it's no big deal. Like you'll just pay a little bit more and a little bit of interest. But they're there to work with you, and they're so understaffed and overworked that the likelihood is little, and they're usually pretty easy to work with. So
makes sense.
Maybe the expectation is they're these like bounty hunters almost. Like when I think of auditors, I'm like, they're coming to get me and they will murder me. And
yeah, that's
probably
not so much like the Ben Affleck version when he's like
right.
autistic accountant, and that's not what
they're not all like that. They're not all hired. They're not all trained by the Navy SEALs.
Most of the CPAs I've met are just fucking nerds, dude. And they're trying to battle the other nerds at the IRS. It's like a huge nerd war.
Yeah, and I think that's another issue with my industry with this field is like you can almost separate it as like new finance and old finance, where like the people that I run in circles with in finance, you hear them talk about cryptocurrency and it's just a complete joke. And they don't understand it and they don't want to because they just tell their clients not to worry about it, and then their clients listen to them. And then you have the crypto maniacs on the other side of things who have never invested in anything else other than crypto, and they don't know much about more responsible investing. So there's a really interesting dichotomy going on where I think there needs to be kind of like a middle ground of people who are like, hey, I'm normal, I get it, like this could be really cool, and these people need help, and it's a legitimate investment, it's a legitimate art, so why not help people figure that out? So
yeah. So there's a lot of questions. There's already some great questions in chat. I think a lot of these, as we start to talk through maybe some of the tax implications, they might get answered. But when it comes to just the little experiment that we ran the other day, I realized just, I guess, how difficult it is to keep track of everything, especially when you're feeling behind. So what are maybe some tools, some best practices, things of that nature that people can start to do to track these transactions that it's going to help them in the long run?
Yeah. So, like I said, best practices are right. Just get your house in order. Start tracking. We tell our clients every I'll relate this back to like budgeting, for example. That's one that people hate doing. They hate setting um, what their current budgets are, how much money they should spend, and it should be a consistent process where at the end of every 2 weeks, at the end of every month, you just sit down and you do it and you just make a thing of it. Whether it's you go to a coffee shop and you just sit there for an hour or two, but really that's you need a consistent process of how you're tracking those transactions, because this is new territory, right? Because you don't have to do this when you're buying and selling stock in Robinhood or in your 401k or whatever it is, because those are reported by whoever, like Fidelity, Vanguard, Robinhood, whoever's doing it. They're doing that for you, whereas these wallets and these exchanges aren't really doing that for you, especially for tax purposes. So you need to like manually input them, whether it's on Google Sheets, which I created a basic one we can drop a link to later, just to get started, or using these platforms like Coinly that upload your transactions. Where it gets more difficult though is with NFT trading. There doesn't seem to be a good platform for that yet that can either use like an API sync or whatever to bring in those trades. But yeah, using software to help is a good start. But yeah, just tagging those transactions at any time you're making any sort of exchange, whether it's a deposit, withdrawal, transfer, trade. Write that stuff down. Every little thing is gonna matter, because it's gonna help you in the long run. So I guess that would be my advice: is to start having more control over it, and because it's hard now if you're going back for the last 12 months to do it. I mean, I would just start fresh with 2021. You can't change your taxes for 2020. I mean, you can do an amendment, but I would just start fresh with 2021 and then keep doing the same process every month, every 2 weeks. So
I think thankfully. I was just gonna say, sorry. I think thankfully a lot of people who are watching it started in 2021 anyways. So I think everyone's probably good there. And then you had the question, Ryan?
Yeah, I was just gonna mention the thing that the third party experience that we experimented with the other day was Coinly. Gossamer had actually referenced that, so thank you for the suggestion, Gossamer. We easily input data from my MetaMask wallet, and then that was it showed me different transactions. It showed me the full sort of ebb and flow of all of my Ethereum. Basically, it doesn't cover all the bases. Like, it doesn't cover my Tezo base purchases, which probably are like 80% of my portfolio, but it was a really nice way to, I guess, use a service to then sort of digest that information and then get started in terms of tracking. So it's not a perfect piece of software, but it was a nice starting point, I thought. So that's definitely one to check out. They should send us so much money now for sponsoring them on this chat.
Yeah, I got a referral link, so let's pump the brakes there.
Yeah.
Push that referral link.
Yeah.
And that's kind of my main question is, so when we are tracking these, because everything is tracked, like that's what these websites pull from, right? Because it's all in the ledger.
Yep.
So are we just needing to categorize what transaction was a gas fee, what transaction was buying what asset, things like that?
Yep.
Okay.
Yeah, because for tax purposes, especially, the cost of the transaction helps offset the money made when you sell or when you're exchanging. So if you're appropriately tagging those things, then that's going to help you save money on taxes in the long run.
Okay.
And you don't want to like double accounting. I think that's some of the times the issue, where if you're moving from one exchange to another and then it doesn't know how to tag it between those two exchanges, sometimes it might like double dip. So it's usually just like a lot of cleaning up. I don't know if anyone's ever used, like, I'll go back to budgeting again, like Mint before or something like that, where it downloads all of your transactions.
Yeah.
You normally just have to go through and like clean up, like, all right, it's tagging, going out to eat as like an optometrist for some reason. Like, I just have to go change that to a restaurant, and then it'll clean up like, the sinks. It should, become smarter, and then in the future it'll do it correctly. So
And then are the gas fees, like the transaction fees that we pay to either mint or to purchase,
yeah.
are those considered expenses? Like what is the terminology for those and
So
how should we look at them?
yeah, so the word cost basis is something everyone should know. So the word cost basis is basically your starting point of when you are buying an asset. So what your cost is to determine how much you're going to get taxed on when you sell. So your cost is the price you paid for it. So let's just use Ethereum. So let's say you paid 2,200 for Ethereum, and then the fees were, I don't know, $20, something like that. So like your actual cost basis for taxes is $2,220. And then if you sell for 3,000, then it's 3,000 minus, 2,220, and that is what your gain is, right? So you add your fee onto the cost that you pay to reduce your overall gain.
Okay, that's helpful.
Okay. And so
And
that
it's
would
I didn't
totally
realize
different
that.
it's totally different when you're creating for the sake of income and like minting an NFT. So that's totally separate, right? So if you're minting an NFT and you're bringing in, that's technically income, and then anything that you spent to make that immediately comes off. Like you can subtract that from the income, and then that's your like net income number, because the way you're taxed on income is totally different than the way you're taxed on investing. And it also depends, like to add more complexity to it, it depends on how long you held an asset when you're investing. So if you hold Ethereum, anything for under a year, it could be Facebook stock, Ethereum, um, whatever it is. If you sell it under 12 months from when you bought it, that is just added as regular income, like W-2 income, um, employment income, whatever it is. And then that gets added to like your pool of money at the end of the year that's taxed at your income tax rate for federal and state. But if you hold it for a year or more, you're only taxed at about 15%.
Mm.
That's the long-term capital gains rate is what it's called.
So if you
That makes
That's
sense?
so
if you sell
tricky.
an NFT, do you get does your income tax get applied at point of sale, or does it get applied when you realize the capital gains from selling your Ethereum into fiat?
So break that down a little. When you're selling an NFT, is it one that you've created or just one you invested in?
Yeah, so if I created an NFT and then sold it for say 1 ETH, at
Yep.
at the point that it sells, is that when it's taxed as income tax, or is it when I
Yes.
sell? Okay,
But you don't pay tax until you do your taxes the next year. So
right.
it's just added as like that's where reporting the stuff to the IRS becomes murky,
Mm.
because just like it's the same thing. I'll compare it back to trading cards again. Um, Ryan and I have a business for our old Pokemon card collection because of the taxes are so screwed up.
Mm.
If I sold a Pokemon card now for a huge gain, I'm supposed to pay tax on that, and most people don't realize that.
Mm.
They just think like, oh, it's this cool thing I bought when I was a kid, and then I made money on it. That's awesome. You're supposed to pay a collectibles tax of 28%,
Wow.
which is where it gets really murky with NFTs, because nobody knows if they're going to be classified as collectibles or as capital assets, investment assets. The IRS hasn't made an official statement on it yet. Most people actually think they're going to be taxed as collectibles at that higher 28% rate instead of 15%. So,
So we should hedge towards the 28% until we hear otherwise.
right.
Yeah.
Is that the
That's
same?
what most people are advising. Yeah.
Is that the same with
That's
like
pretty
traditional art, like a painting? Is that
Yeah.
a collectible?
Mhm.
Oh, I didn't even know that.
Yeah, there's I forget the IRS code. There's a code that classifies art, collectible coins, trading cards, stamps, music. I think that's kind of like the big five that fall into that category. Yeah, but
So how is everyone laundering their money then, if it's taxed at such a high rate?
they don't know to report it, and then no one knows to the biggest thing with the IRS is normally someone has to report it to them for them to find out.
Mm.
Right. So like, for example, with the Pokemon cards, if we sell, I think it's on eBay, it's $20,000 worth of sales in a year, then eBay reports that to the IRS. Anything under that, they don't really report it to the IRS. And then the IRS has no idea that that went on. And 99 times out of 100, it's going to go under the radar. So that's why it's kind of just like, to your point earlier, you're just trying your best and doing what you think is right. And then you're like, all right, I think this is good. And then you send it to them and usually there's no problem. But it's when you mislead them, like intentionally, then that's the issue.
So you only get caught if someone snitches, is what you're saying?
Pretty much, yeah.
Okay.
Yeah.
Fair enough.
I'm actually undercover for that reason right now.
I knew it.
That's why you're wearing a hoodie.
Government chat.
Oh man. So another question that's coming up, and I'm trying to keep up here, but do you have to pay taxes if you don't sell? So if you're holding cryptocurrencies or if you're holding NFTs, do you have to pay taxes for things? None.
Nope. Well, if you're holding it, you're fine. What my point earlier is that I think most people think they're holding during transactions in which they're not. So like if you're trading crypto for an NFT, that counts as a transaction, and that's what you have to pay tax on. But if you just buy, if you buy Bitcoin, Ethereum, whatever it is, and hang on to it, that doesn't matter. And if you move it between exchanges, that doesn't matter either. But if you're swapping for other crypto, that does count, right? So that's where it gets kind of murky. Is like what, to me, it makes sense because I do this stuff all day for whether it's transferring, assets in client accounts, and it makes sense to me. But it took Timmy 10 years to figure this stuff out, to get advice on it.
So swapping, as we commonly understand it, is when we're utilizing Ethereum for placing bids on a Rarible. We have to wrap our Ethereum. That wrapping or that swapping that takes place is a taxable event, and vice versa. If you want to take your wrapped Ethereum and switch back to Ethereum, then that's also taxable.
Correct. And it's
which
always
really sucks.
Yeah,
because there's a lot of those.
And that's something we figured out the other day just by going through your I never would have, because I've never done that. I've never bid on, digital art and NFT. So I don't know that process. I'm going to start doing more of that because I am interested in it. I just don't know what I don't know. And then going through that, I'm like, wait, what is this transaction? And you explained it. I'm like, yeah, that's taxable because you're trading one thing for another. Doesn't matter what it's for or how quick it is. And it's always at the price when you make that transaction. That's what the taxes are based on. I think that question comes up a lot. Like, what value am I taxed on? And it's always like it's called fair market value. That's the term that is used the most. Is when I'm selling Ethereum, what is the determined market value? And that's easy to figure out because there's so much information on these exchanges to the second of what the value is at that time. But then it's harder with things like collectibles and other things because you don't really know what the value is until someone pays it, right? So I think that's the issue with NFTs because, maybe not because they're unique in nature, right? There's no duplicates, right? So the market value is just the last price or the current price that someone pays for it in a transaction.
Yeah. And something to clarify that I'm only clarifying because I was confused about this before I researched it a little bit, is that you're and Lauren asked the question that's similar, but they cost the same. No, wrapped ETH and ETH is the same. So yeah, so you wouldn't, if I bought $500 in ETH last year and then it appreciated to $1,000 and then wrapped it, I would be paying I'd be paying the $500 gain in appreciated value. It wouldn't tax the full transaction amount every time. It would just be the gain or loss, right?
The gain, yeah. So the gain is taken out as income, right? So that $500, that is now a realized gain, is what it's called. So there's unrealized gain, which is your profit you made by holding something, but you haven't sold it yet. And then realized gain is when you realize it, when you sell it. So that $500 realized gain is your investment income that then gets added to this formula to your other income, and then is taxed with other stuff at 15%. So it's all like tax returns is all just pluses and minuses that you're just like kind of divvying up at the end, at the end of the year. So that's sometimes that could be a good thing though, when you're like, intelligently taking gains, because then now your starting point is now 1,000, right? So then if you sell it for 1,500, right, you already paid that $500 gain, and then now you only have that $500 gain left versus a full $1,000 gain, which could end up in more tax based on our tax code. So,
This has all just made me realize that there is a massive opportunity for a company to come in and create a solution that ingests all of these APIs from these companies. Well, if like Rarible and these other platforms even have an API available, which I'm sure
hard,
they
man,
do to
because
some extent.
that's part of the appeal of this side of the finance is more independence and lack of transparency. Taking it away from banking and tracking. So I think that's always going to be an issue. Is privacy, data privacy especially. Because who's to say then, like, if you're connected to one of these, like Coinly, for example, the IRS can't come in and just pull all of their transactions. They can do whatever the hell they want.
Yeah.
So don't let that discourage you from using those things, but that's a real possibility.
I want to mint on Monero.
Do you?
Yeah. I wouldn't mind it.
Hidden. It's hidden.
Oh, that's the. Jeez,
Yeah, can't find that shit.
That's one that's a privacy coin.
I
Orphan's making his own platform.
Hiding from the IRS a little bit. So like an exchange, right? Coinbase, that has your social security number. That's extremely linked to me personally as like an individual. My MetaMask wallet, the only thing that links me to that is my name if I choose to add that in.
Sure.
If I have, ETH in my MetaMask wallet and I don't have my name in there, I could technically really do whatever I want, and there's no way to link that directly to me and be taxed for that. Like if I could buy groceries with my MetaMask wallet, there's like not really a way to be taxed on that, right? Or to officially track it.
Right now, yeah.
It is. Yeah. Right.
Yeah. So I think that's the disclaimer that's hard for someone like me to make, who's like liable for these types of things. Like I'm not really liable for anything I say today. It's just more like best practices, things like that. But if I were to tell a client who pays me to do something like that, like I have an obligation to do what's right by them. Right. And yeah, like that's probably the best practice is like don't be a nerd and just like report all of your money to the government, right? But also like you think there's a risk reward. There's it's you should also contribute some of the money to our however you stand and politically or whatever on taxation, whether you're Ron Swanson who thinks it's theft or you contribute to society, like you should pay something. But like how much, and if Jeff Bezos can just like fuck off to space and say like forget all the poor people like and not pay that many taxes, like who's to say that like we shouldn't be trying our hardest not to as well. So it's tough.
Amen, brother.
Have you guys seen the libertarian debate where they're like, I don't need a license to operate my toaster, and it's like, why do I need a license to operate my car? Yeah, it's
I love that.
well, it seems like the fear is what gets me, right? Because it's like, okay, so right now, that's everything seems like you could hide your wallets in transactions in a way that just would be really hard to find. But it's like, fuck, if they find that out in 2-3 years when they come out with some sort of like operation, or they just decide, hey, okay, so your Coinbase is linked to your identity, and then you've made every single in on this MetaMask wallet comes from that Coinbase. And then they're just like, that's enough evidence for us to like say that this is your MetaMask wallet. And then they decide to go after you for that. It's like, I don't know what is going to happen. So I would rather not go to jail for 80 years or something. I don't know, but it's so uncharted.
Yeah, and I think that goes back to do what you think is right. and because Coinbase isn't a regulated exchange that is going to report your transactions. So how far they can dig beyond that, it depends on the scale. Like if you're making huge exchanges and transfers, they're going to be more, motivated to come after you, right? But mostly like audits are scary from the fact that they just take a lot of your time up and they suck because you have to document every little thing for them. So that's why I go back to earlier. If you're tracking all of your trades, exchanges, purchases, then at least you're prepared, because a lot of times they're not auditing you for like 8 months ago, they're auditing you for like 4 to 6 years ago. And then you're like, I don't remember what I was doing. But like I had a friend who I worked with, we were all self-employed, even though when I worked for like a bigger company, and he got audited for like maybe 4 or 5 years prior. And a big expense that we used to write off for business was mileage in your vehicle. You can write off like every 50 cents a mile that you drive for a meeting or something. He had to go back like through his calendar and like go on Google Maps and every meeting for the entire year, he had to look at like how far did I drive for that, and then actually come up with a method to prove like how he did that. So that's an extreme, but that they make you prove it, or they just assume there's a baseline assumption. They say, okay, this is all taxable. So unless you can prove otherwise, like that you bought it at a certain price and sold it, like we're just assuming you bought it at zero and it's all taxable, and then you have to pay the tax that you owe for doing that, plus like interest and penalties for not doing it for 5 years in that scenario.
Okay.
We're gonna play the oof noise.
We're gonna need some of those sound effects.
Yeah, I'll be playing the oof noise throughout this entire discussion.
I love this. Wondering if I should divorce my wife now so I don't get involved in my schemes. That's great.
All right, I'm gonna backtrack to some questions that we got while we were chatting too.
Yeah.
So one of the questions that Lerona asked was, if you sell an NFT and you donate those proceeds to charity, or not for profit, whatever, what is that considered as, and how does that benefit you?
Who are you donating it to? What's the?
It's a hypothetical. So let's say maybe there's a tax write-off that's associated with this donation.
Like a
Yeah, like an
children.
official.
I mean, like who are you actually donate? Like it's like a cause that you, like any cause that you care about, or is there like actual donations in this space that people make often?
So there's a couple examples where people have offset their carbon emissions by planting trees. So they'll donate to a company that specializes in planting trees through those monetary donations. That's one example.
Or a kid who's sick.
So
What'd you say, Orphan?
Just a kid who's sick. Maybe you find him on the street.
Yeah.
Just
yeah. So
Orphan for
donations. A big tax misconception is like if you donate money, like there's really not that many write-offs from just donating to a cause that you enjoy. But if you're gifting an asset, whether it's like most people do this if they have appreciated like company stock. So they were a bigwig at a company and they have all this stock that was bought at like 10 cents and now it's worth like millions of dollars. How do they give that away without paying just an assload of taxes? They'll give it to an organization, but it has to be like a qualified organization that can receive it, which is another tax code. So it's like the Salvation Army or something, whoever that may be. You have to have proof that you gave it to the tax code is like a 401c3 or something like that. There has to be proof that it's to a qualified charity, essentially. So if it is, then yeah, you can kind of think like how that would help tax-wise. I don't think there's any benefit other than you don't have to pay tax on the money made on that particular one. It's not going to help you with your other stuff.
Gotcha. So if it's a not-for-profit, it would help with that particular sale. But it did. I thought like not-for-profit donations, you only get a certain percentage at the same time as well. So like, how
Yeah, it
does
all
that...
depends on like the type. So a lot of stuff is always generic too, because everybody, like, you live in a different state, so like every state has different ways that they treat their income tax if you're donating it. Some states don't have income tax, and then federally it also depends on how much money you make. But normally I think you can only deduct like $300 or something like that off of your
Ugh.
income tax. So yeah,
Ooh.
right.
That's not enough.
Nope.
No, it's
I
not.
thought it was more than that.
It's a 501.
It might be 600. It might be 501c3. It might be $600 if you're married.
Mm.
But that stuff always changes too with the administration. So
Okay. And then the other question that I had, as we were chatting through things, the tax implications. If I am taking my Ethereum, because this actually spurred the thought when we were talking about selling currencies within that 12-month period. If I am taking a recent purchase of Ethereum from Coinbase and I am transferring it to my MetaMask wallet, but then I want to use that for a purchase. Like, when is the actual like sell event? Is it the transition to the wallet, or is it the purchase of the NFT that's considered a sale? Or is it none of those?
It's the purchase of the NFT that's considered a sale. So when you're moving it, when you're moving an asset that is, it's called like a like kind exchange. So when you're moving Ethereum to like its own Ethereum, essentially, or ETH, I guess is the cool way to say it, then that is not taxed. When you're keeping it the same, doesn't matter where it is, as long as you're keeping it without selling it, then it's not taxable. It's only when you're turning it into something else.
Ah, okay. Okay, that makes a lot of sense. So flip-flopping between wallets, not a problem so long as the currency is not being swapped.
The only issue may come up.
What's up?
Sorry.
Was that right?
Even if it's a wallet of another person, like if I wanted to give you Ethereum.
That is a good question. I think
that'd be a sale, right?
That's I believe, a taxable event.
You can gift though. There's a certain amount you can gift to someone. I think it's like 20,000 without being.
There's an estate tax. It's like 10,000 a year. You can give up to 10,000 a year, but then there's a lifetime exclusion of like $12 million that it's basically you can give however much you want to somebody. If it's under like 12, like if you're never going to give $12 million away, like you don't have to worry about it. I don't know how they classify that with the IRS. Yeah. Let me see. I have a resource up that I had a lot of these quick hitting stuff too.
I would love to butt up against that $12 million limit.
Right.
That's like a good problem to have, you know. So Julian has to pay on his 10.
It's not a taxable event. But I think that goes back to the question earlier of if Coinbase reports that you bought it and then that it transferred out, then that may cause some questions of, okay, like what did you do with it from there? Or we're just going to assume that that's how much you had, so then you sold it, so then we're going to come after that. But that's only if you get audited. So
then you say, "Get bent, nerd." Peace.
Yep.
I'm not going to jail.
I ain't going back.
And then you jump out of the sewer hole and down the waterfall. like The Fugitive. Have you guys seen that?
Well, it was like a Goonies reference.
That's close. It's The Fugitive with Harrison Ford.
It's been many a year since I've seen that movie.
It's fair. It's okay. But all of this is really good to know. But to avoid feeling overwhelmed and super stressed and paralyzed so we don't do anything, we just need to be categorizing things and keeping track, and then like you said at the beginning, doing our best, right?
I think this is like a good start to just understand the basics of how things work. And like I definitely wouldn't look at this as a way to just shut down and then not worry about it. Because that's how I handle stuff when it, like life stuff, when that were to happen. I just like, I'm not dealing with this, so I'll just worry about this future Chris's problem. But no, I just arm yourself with the right resources, start using those trackers, and it's going to get, like, more people are going to get frustrated by this, and someone is going to create something to help with but it needs to be someone from the community who has that privacy thing in mind, where they're like, I'm somebody who wants to track NFTs and is really passionate about this space, and I just need to I need something that's going to help me, and then that person will create it. And obviously there's money to be made in that too, so they'd be smart too. And that one resource, the crypto tax calculator, they said they track NFTs. I wasn't able to really dive into it too much, but I'm sure that at some point somebody will be able to launch a resource that's more helpful than Excel or Google Sheets. So
yeah, they let us down. I just want them to know that we were looking forward to using their solutions, and they let us down. Unbelievable. All right. So we have some additional questions here. I got questions in like 15 different channels and in DMs, so bear with me, guys. I absolutely love that there's so much interest, though. It just shows that so many of us have questions about this stuff and are trying to figure this out. And actually, someone just said, "I cannot believe this stream is free." So they're getting
It's
they're
not.
getting their money's worth here.
It's not. You sub to me right now. It's not free. I'll ban you if you don't sub right now.
Per sub.
I was told I'd be getting 1 full giga chad for this chat.
We'll have to talk.
I don't know where to get it.
People. We'll have to talk to people and see if we can get you one. I'll give you my soiled Beeple underwear though as payment if you want.
Oh yeah, you won that, didn't you?
Let's see here. There's underwear coming with the the infinite object.
You gonna smell it?
Ah, dude.
I see one question that's easy to answer. For the full year, someone said, is it holding it for the full year, January 1 to December 31? No, it's just 12 months from the date in which you bought it or made the transaction.
That's a good one.
What if it's a leap year?
You're in luck, man. No, you're not in luck. You gotta wait longer.
You gotta wait another day, right?
Yeah.
God damn it.
Fuck.
If you buy it on February 29th, then it's actually it's free.
Okay.
You never have to worry about it.
Perfect. Okay. Yeah, the 29th, everyone's just gonna do huge NFT sales and then just throw it in a cave.
Gas is gonna be 5,000.
Yeah.
Incredible. All right, so here's a question about NFT sales tax. The person that asked wants to know whether sale tax applies for creators, and if so, how would one even figure out what state or district to remit sales tax to?
That's a tough one. I'm not great with sales tax. Fortunately, my wife creates digital resources on a platform and has to remit sales taxes, so I have researched a little bit. And there's some court case that they always refer to as like Wayfair versus somebody else because they were skirting sales tax laws. I don't know. Collectibles get kind of murky because I don't think you have to remit sales tax on collectibles, but then you do on eBay, so I'm not really sure. That could be something that you can look into, but it's usually the sales. Always the sales tax based on where the buyer's located. But then you don't normally have to report until you do like a certain amount of transactions in a particular state. So it's super complicated. But that could be something that we can follow up with.
Okay. So more details to follow, it sounds like.
Yeah.
Okay.
Yeah, I don't feel confident enough to answer that right now. So we just want to look up a couple things quick.
All good. We're judging you, but it's all good.
Listen, I was always taught to admit when you don't know something and that you'll look it up later. So
It's such a good way to
Oh,
go
Mom and
about
Dad
your
taught me
life.
The opposite.
Yeah.
You guys got different advice growing up in the same house?
It's pretty fucked.
That's awesome. It's a social
social
experiment.
experiment, I
Which
think.
one of you is the prisoner
Yeah.
and which one of you is the prison guard?
Oh man, Chris probably thinks he's the prisoner, but I probably am.
You
What's
both
this
you both the
reference
prisoner.
to?
I've had it. He stole my thunder. I had it made, and then he stole my shit. He stole all the attention.
The question that I want to know the most is just if you're traveling in a vehicle but not driving it, do you have to have a driver's license? Under color of law?
I don't know.
Okay,
Once again, I'll
That's a
I'll look it up and come back.
that's fair.
I'm just gonna keep pleading the
that's a
fifth on
fucking
every question.
cop out.
It's all right.
Yeah.
I'm looking through. I'm trying to catch up with some of the questions here. So one of the other things that I think we were talking about the other day, Chris, was trading. So trading NFTs with one another, and then the actual sale of said NFT, or if the value of the NFTs that were traded. In the case of Savage Dogs, he is a creator that traded, I believe, a work of his art for a CryptoPunk, which is infamously very valuable.
Right.
So one might say that the trade value in those two tokens or assets was not the same. It also could have been argued that it makes his work more relevant and more valuable because of that trade. So how do you approach trades in taxes for NFTs?
Yeah, so I go back to that fair market value term where it's determining the value at the time of which you're trading or selling something. And it's only ever an issue for taxes if you are trading something and it's not equal, right? So if I'm selling you my car and my car is worth 20 grand and you only pay 5 grand, then that's an issue for taxes, right? And that you are buying something that is worth less, or the opposite. Let's say I am selling you something my car is worth 5 grand and then I sell it to you for 20. I should be paying taxes on that 15 grand of like inefficiency. Basically, like if I'm screwing you over that much and you're willing to do it, like there's tax to be paid there. But normally if I sell you my car and you're paying me what it's worth, you don't pay tax on that because it's exchanging two things that are equal, if that makes sense. So if the problem with NFTs is there's really no value, there's really no way to value them in real time until somebody is paying for it. So that's a tricky one where they might go with like the last price that it was sold at, or they might go with at the time of the trade, those two parties agree that they are, equal value. So then that's not a taxable event, if that makes sense. But it's still tied to like the value that you put into it originally. So in this example, do you have amounts like that we can use, or no?
Oh yeah, so like actual physical or like amounts,
Yeah,
or just like a hypothetical.
If you have like real numbers, then let's use those.
Of the Savage Dogs trade, I don't. I
mean,
have no.
Probably. I mean, CryptoPunks are in the millions, and
Yeah.
dogs are a couple thousand.
Okay.
Yeah. So let's say a Savage Dog is worth. Let's say a Savage Dog is worth 5 ETH. Let's say the CryptoPunk that he traded for was 30 or 40 ETH.
Okay. Yeah, so in that case, like if there's a way to figure out like what they're worth in real time, trading that one that's 5 ETH for 40 ETH, you're gonna have to pay tax on the difference. Like that is that's how that works. So it's 35 ETH is your gain on that. So because it's essentially you're taking something worth 5, selling it for 40.
But
think of it that way.
Would it be worth what the CryptoPunk was last sold for? Because the value of it's depending on who wants to pay. So if the market's down, then
that's the thing with NFTs that right now there's no guidance on, because technically it's worth once like the Savage Dog NFT, whatever it's called.
Yeah.
So because it's a one of, everything's like a one of one, if that makes sense.
Yeah.
So I don't know how to actually answer that, because if it was sold previously for so much, and that just means like it may have lost value if someone's willing to part with it for something less, even though that may not be the case. Maybe they're just generous and they want to give it away in exchange for something else. Like that's where these things become murky, because it's such a new field, a new area, that there's been no official guidance on that yet. So
it would be similar to
like
original painting, wouldn't it? How do they do that in the traditional art world?
I'm not sure actually. How we don't have a ton of like people who trade trade art.
Yeah.
It's usually but it usually goes by like, I think previous sale would be the market value. There has to be a way to value, like there has to be some way to value like an efficient update of like how things are moving and tracking in price. But that's when it gets tough, when things are so unique, because there's no exchange of other people trading it that you can refer to. So
it's so confusing too, because
right
there might be trades that are occurring and it might not have a prior sale, right? Like
right.
In this instance with the CryptoPunk, like maybe it sold when they initially launched. When was that? Like 2016, 2017? So whatever the price of that, I don't even know. Maybe they were gifted. I don't even remember the initial story.
They were like almost free.
Yeah, they were very cheap.
Yeah.
So then what happens in those scenarios where like someone is trading that, and like as a collection and historically there's a lot more value than what the initial cost was, but then they just traded it for, let's continue to use this situation with the Savage Dogs trade, and it didn't previously have a price associated with it, then what's taxable there? And that's where it seems like, when Chris and I were talking about it, it was like, how the hell is the IRS going to figure this out? Like, I don't know how they're going to track those things.
Yeah, because Savage made the piece for this. It was just made specifically for that trade.
Yeah,
right.
It wasn't pre-existing.
And I mean, they're just catching up just on cryptocurrency in general. It just became like a question on the I think it was like the 2019 or 2020 tax return. Like, do you trade, and have any profits been made in trading cryptocurrency? And it's just like a checkbox. So like think about how like simple and archaic that is, and something that's been around since like 2009 or whatever. Like it's going to take a long time. So I think that's encouraging from a standpoint of you're not going to get like tracked down, but like I said, I don't know like what they're working on. So I would always go back to like, I would always keep track of things. Like me personally, I like to keep track of stuff to see how I'm doing, like investment wise, profitability, things like that. And then that will just help with taxes anyways. And then going back to the sales tax one, I actually was able to look it up really quick. Something I forgot is those rulings with like Wayfair and those digital exchanges is digital content is taxed differently than physical. So until they make a stance whether NFTs are a physical or digital collectible, I would probably lean towards digital, and you don't have to collect sales tax on that. But it's different per state, and it's about like the amount you sell in that state in a particular year. So but it's normally a huge amount. It's only like $100,000 of sales in that state in a calendar year before you have to actually start collecting sales tax.
What's
most,
the
like if you do it on
can go to? Sorry, I think there's like a 3-second delay.
Okay. I'm not sure actually. There's like I think it's called Tax Jar is a good one for sales tax.
Tax Jar is the one for sales tax.
Yep. Do you need me to do anything for the delay or no?
No.
It's probably me, honestly.
It's probably Ryan.
Well, we were having the issue earlier because you're
computer.
But that
I'll drop out and come back.
Certain states don't collect it, others do, so that's why it's such a pain in the ass is figuring that out. But exchanges usually regulate that for you, or they'll like remit for you. But I don't know if you're, as an artist, if there's a certain exchange you're using, or if you're doing it direct, like one-to-one. So that would make it easier if there was a platform that did it for you.
Okay. Yeah, a platform would just make all of this much easier, huh? And like you said, someone's gonna build it eventually.
Right.
Yeah, it's gotta come.
I had a question, Chris. So I've been thinking about this. So as like a small business lens on this, so I would say that I've bought certain NFTs as a marketing expense.
Okay.
Like I've bought an NFT to use it as promotion or to sell or to give away for a contest, or, to use it clearly as something that's part of my business and not as an investment. Is there any delineation between something like that and a normal purchase of an NFT?
Yes. I mean, so the extent to which you can write things like that off is if you have a trade or a business to write that off against. So you have to actually be making money in a related business to then be able to write those expenses off. So from my understanding, right, you're an artist and you're a creator, right? Or am I?
Yeah.
And if you're making income from that, then yes, you can use those expenses to offset income. You can never go negative, if that makes sense. So if you're not making any money, or on the investment side of things, if you have no gains to show, you can't show losses or expenses. It's only to get you down to zero. It's never to go below zero.
I see.
That's how our tax code works. So,
Okay.
and it's always hard with the write-offs, and small business tax is a whole different story. But I think you could probably just tag those as a marketing expense.
Yeah. What
Or something
criteria?
like that.
What criteria would it need to meet to classify as a marketing expense? Because it gets kind of muddy with me, because it's I've got this stream, I sell art, everything that I buy helps build the community because I'm, supporting other artists and they come and help me out or talk on the stream and stuff. And it gets really muddy. So it's do I just write off as many as I want to as marketing expenses, or do I, is there something that I need to meet?
No, I mean, it's another best practice thing that you can then prove where if you're giving it away, if you're buying them and then giving it away, I think that is a clear-cut transaction that you can say, okay, that was an expense. If you're buying it and then just have it in the background or using it for something, I don't think I would classify that as an expense, because you're still keeping the thing that may be worth money. But if you're giving it away, then I think that's a complete transaction that you can then write off. So it's a difficult, because there's so many new areas when it comes to write-offs and expenses in, for streamers. I have a client who's a Twitch streamer, so their write-offs, their expenses are so much different than the traditional clients that we're used to working with, when it's usually just payroll or actually physical items or rent, things like that. So all this stuff will become more just easier to help with in the future when we just have more examples, which is why I like doing this kind of stuff and learning more, or working with people who are are on cutting edge areas, because then as it grows, then I'll have experience for the future. So
Hey guys, I just wanted to maybe take 2 seconds to reset the room, because we're just past the hour mark. So we got a great amount of people that have been asking questions. I think what we'll do is we had one question about an LLC that I think would be really good to get to, but then I wanted to talk about strategies on when to sell. So if there's a particular time of year, I know a lot of people sold particular cryptocurrencies or NFTs before tax season this past year. So maybe there's some advice around that, and then just general financial advice in terms of when to take gains, and talking about that. And at the very back end of the conversation, if we have more time, we can still take questions in the Twitch chat and get to as many of those as possible. But if we keep asking questions in the chat, we'll probably miss all the other stuff that we want to talk about. But before we do that, we are talking with Chris of Iconoclastic Capital, and I'll drop Chris's links to his business and his Twitter handle in the chat too. So if you guys have follow-up questions, you can ping him there.
And it's not a free stream. Please sub to me right now.
So going to which one do you want to tackle first? Like,
Let's talk about the
when this
LLC.
timing?
Like, no,
Okay.
is it beneficial for creatives that are creating a lot of NFT work to set up an LLC, and what are the actual like implications? What are the benefits of doing so?
As far as a creator, there's not as many benefits because you're still a sole proprietor for taxes, meaning like you, it's like I told Orphan earlier, as long as you're making income from it, doesn't matter if you're an LLC, sole proprietor, whatever, you can then use like business expenses against the income that you're making. LLCs make more sense in our example that we formed one like as investors or collectors, buying it through that LLC. Then all of our expenses that we for example, like these, like going back to like the Macho Man, like putting it in that capsule, like getting it graded by PSA, that was an expense that we got to then write off on the money that we can make on other card sales. Normally, if we weren't an LLC and just a collector, the money we spend to grade this would just be lost, and we'd still like have to, you know, pay all the taxes on that money we made. But then we're also offsetting that like 28% tax is now totally different. It's not really investment income anymore. It's business income, which is totally different in tax, like with everything else. So by doing that, you can take a lot more expenses and then tag it as like business related. So no, LLC is more related around like protection from being sued or for the sake of like separating money. So if you have an LLC and someone like the IRS comes after you or if someone tries to sue you, it can only come after the money that is in your LLC, anything associated with it. If you don't have an LLC, then they can come after everything. They can come after your wife's retirement account if you're married. They could come after your own, checking account if you're an individual. So that's really, it's more around protection, not so much around taxes.
Mm-hmm. Is that something that
or to form it with like with a partner or something like that too? If you have multiple people, it makes it something you could buy into.
Savings account. Damn.
So is that something we should be looking into?
I don't know. It depends on how they come out in class. I would wait until the IRS takes a stance on whether their taxes collectibles or not, because then you're not really.
Okay.
People don't form LLCs to buy and sell, stock. It's just there's no advantage to it. It's really only saving money on like a collectibles business essentially. So, and then you have to have expenses with it. There's not as many expenses in NFT other than just some of the fees versus physical card trading. There's when it's physical cards, you have the grading fees, shipping. Some people have to pay insurance, storage, all that kind of stuff. So,
what signals would you be looking for? I know you just said, but what are the exact signals that you would be looking for from the IRS to come to a decision to then, I guess, suggest that someone gets an LLC?
I mean, they would come out with a publication saying, here's how we're classifying non-fungible tokens as an asset, and that'd be it would be a big deal in your community. So like if they come out and say that they are, and if non-fungible tokens are classified as a collectible asset, then I would look to forming an LLC to then buy and sell and exchange.
I see.
But then I don't know if like an LLC account can be formed, on these exchanges, or if you can buy it. Because so I have an LLC for my business, and I have bank accounts and accounts set up in its name. And normally that's the best way for me to take income, send things out. It's not in my personal accounts anymore. So I don't know if there's you can create corporate accounts on these exchanges that are used right now. So.
Okay. Okay.
Just checked out your site, by the way, and it looks really good.
Oh, thanks.
It's very clean. I like it.
It's been a work in progress for a while. We're going to be updating it soon. But yeah, I wanted to make it just simple to start, and that full of shit. So
It's nice.
No bullshit.
The tag's punchy.
Oh yeah.
I'm gonna tell Cass that she's getting compliments right now. It's my partner helped write the copy.
Nice.
All right, let's switch gears. So, strategies on when to sell. Are there times of the year that you should sell? Is it beneficial to sell before tax season? Are there things that you know of that you would recommend people do when it comes to selling off cryptocurrencies or their NFTs?
Yeah, so I mean, it applies to the same advice that we give to clients on investment planning. If you're trying to do it for tax purposes, it has to be done. It's a calendar year thing, so it has to be done between, like January and December for that to count for taxes. If you do it on April 14th, it doesn't matter. You're already in the next year. So generally, we use it's called tax loss harvesting, which is a fancy way to say like selling for losses or gains to then offset other losses or gains. So if you have an asset that's gone up significantly and you want to sell it because you're just like, I've made so much money on this, like it would be stupid to keep it in here and not just take some out and take some risk off the table, but you owe a lot of money in taxes, then you can sell something else that didn't do so well, and then those will offset. So let's say you made 10 grand on a trade, and then you lost 5 grand on another trade. If you sell both of those, then you only owe 5,000 for tax purposes because the loss offset the gains. So
I should sell everything now, and then I won't owe taxes.
Yeah, if you just keep losing money on it, and for the sake of this, you're doing great.
Gotcha, dude. I got it.
But yeah, I mean it's a tough. That's something we struggle with all the time with our business. It's called asset location. It's how much you're holding in one particular investment, and if you should keep holding it for tax purposes, for investment purposes. Doesn't matter how much tax you're paying if it keeps going up, right? Because you're only paying a portion in tax, and you get to keep the rest. So when is it good to call it quits a little bit? That's based on everything else, because I think my answers as someone who is responsible for like doing what's right by somebody and then going with like traditions of finance, the rates of return that we look for are so much different than in the crypto community, because expectations have been just I think just totally smashed like out of the park in terms of some of these different assets, right? So for example, when we're doing retirement planning for our clients, if we're projecting like 8% per year gain on something, like that's pretty good. And that's gonna get you to where you need to be retirement wise, because if you're putting enough money away and it's invested in a compounding for 30-40 years, like 8% is amazing, right? And if conversely in this community, if you're not getting 8% like during this stream, like what the fuck are you doing?
It's 8,000
right?
get the fuck out.
Yeah.
So there's like expectations that need to be tempered. I think it's hard not to get caught up in like a hype cycle, for sure. Like it's same thing like why I lost my ass on Nano and what was it? What was the stupid one, right? Tron. I didn't invest in AMC.
Oh,
yeah.
Back in like 2017.
Yeah, Nano was a big one.
Yep.
That was a tough
Nano's
one.
A big one. Yeah. I still have money locked up in whatever that is.
Like, it'll come back.
Emails from the lawyer, the class action lawsuit. Something I pay attention to though is looking at something as a whole. Like NFTs, it's hard, but with cryptocurrency, like for me, when I had clients asking about Doge, and then I looked at it and like, okay, this thing is worth like $100 billion if you put it in real life terms, which is a major corporation in the US that isn't like their stock isn't doing that well. So when you like put it in real terms, like there's no way that this can keep going to the point where someone just says, all right, this doesn't make any sense, and then no one's going to buy it anymore. So I think you look at certain things like that where if you're trying to catch some sort of wave, and then you're like, okay, this is worth X, and it's going to come back to bite you eventually. But also, when you're buying something and investing, I always have a kind of like a lever to pull, like predetermined when I'm buying it. So on like Coinbase Pro, that's just what I use to make basic trades with. I only trade Ethereum, and when I'm buying, I'm always placing a sale in the future to trigger at a certain price, because I know, like for example, I bought at 2100, and and then I place a sell at 3000, because I know if it's getting up to 3000 and it's at 2900, I'm not going to want to sell at 3000, because then I think it's going to 5. But if I ahead of time take care of that, then it just happens automatically. I don't have to worry about it, and then I get out of my own way emotionally and don't get caught up in it. So I would just have like some best practices to take money off the table. One thing I really like doing, especially when it comes to trading like this, is selling whatever you had put into it, and then just ride out whatever is free money. So if you put $1,000 US into Ethereum, and then it goes up to, and then it's worth 3,000, just get your $1,000 back, and then let the rest of it ride. So at least you got what you put into it back, right? And then whatever up, from there is gravy. But it's all based on what your life situations are. If you need the money, if you have credit card debt, or you're struggling with other certain areas, don't fucking put money in this stuff. You know what I mean? Like, you get your house in order like ahead of time, because it's going to like spiral out of control. You're going to start chasing things that aren't
healthy,
and then it's almost like a gambling addiction. So
hey, who do you think you are telling people what to do with their money, man? Okay.
I'm a concerned citizen.
This is not financial advice, everyone. Just want to be very clear about that.
Why haven't we made that joke sooner?
I think something too with like that, it happens a lot with in my industry. I go back to it earlier, like people in my shoes don't ever recommend any allocation towards cryptocurrencies, alternative assets. We generally tell people 5% of their investable assets should go into something like this. If that gives you a scale of what we're talking about. I'm not saying that's what anyone listening should do, but that's what if someone comes to us and says, I'd like to start investing in cryptocurrency alternatives, what should I shoot for? And we say, okay, here's how much you have invested in retirement, in stocks and bonds, in mutual funds, whatever it is. Take 5% of that number, and then we'll put it into something like cryptocurrency. So to give you an idea of how we approach that and are recommending.
But what if you did the opposite and you had 5% in fiat and 95% of your net worth in cryptocurrency?
That's my heart's racing as you say that. My Apple Watch is going off.
Yeah. But it's a pretty Chad move. I mean, coming from Chris the Alpha Chad, then that's a pretty Chad move, right?
That's many gigas. But
the ultra giga.
Yeah.
To go back to like, in the past, like I would have been wrong to say that, like, and you would have been right. So who's to say, like, I can't predict the future. It's just minimizing risk and doing what you think, like putting yourself where if something does go to zero, like, are you still okay? It would suck, but also like, are you gonna have to make compromises in life if that were to happen? So
yeah. So Grumpy asked a question that I actually do think is related to crypto and NFTs, which was kind of similar to what you were just saying about like credit card debt too. It's, should I invest my savings or pay student debt with, I guess, like with profits, or just being mindful of the money that you're
it sounds like a general question that that's one of the most popular questions we get from anybody that we work with is, all right, I've got enough like in my checking account. What should I start really doing with this like extra money that I have? Should I put it towards student loans, my mortgage, or should I invest it? There's two schools of thought. You have to look at the interest rate of your debt. So if your student debt is like currently most people's is 0 because there's been a moratorium on student loans where you don't have to pay them if they're federal. And we've been telling clients, no, don't pay that off because it's flat, and then do other things, whether it's pay off higher interest debt or invest it in. Most people want to just invest in basic, whether it's their retirement or like taxable investment accounts, where you can get a better rate of return than your current drag on those debts, if that makes sense. So if a student loan is only like I would say 6% or less interest rate, most people can consolidate them now down to below 4. I generally wouldn't overpay those if you have an opportunity to then invest that money. The other school of thought is things like mortgages, student loans. Those are what's forced savings. So you're making those payments every month. If you're making overpayments, you're doing that every month consistently. It's harder to then consistently like take that money and invest it because you have to remember to do it. You have, like there's temptation otherwise to spend it. So that becomes a whole like behavioral finance thing we study too. But I'm more a proponent of if you can control like in a vacuum both scenarios, I'd rather invest the money and grow it, because you can then, who's to say you can't take a chunk of that investment and pay off your debt in the future, when you've made more money on it. So it's not like one thing doesn't mean you can't do the other in the future as well. But when you do pay off debt, if you take whether it's a lump sum or you're making overpayments, you can't ever get that money back. You can't call them and be like, I made overpayments by $10,000 last year. Give me that money back. I need it. It's not a thing. So.
It's good advice.
Yeah.
All right, cool.
Give me like 30 seconds to grab a water while you look at some questions.
Oh yeah.
That sounds fantastic.
Here, I'll play more BitConnect music.
Yeah, hype the crowd up. So,
all right, guys, little intermission here. BitConnect. Let's go. Let's fucking go. Taxes. Drop some emotes in chat for taxes. One in chat if you like taxes. Let's go. Let's fucking go.
For taxes.
Drink that booze.
Ryan has kombucha. Let's fucking go. All right, he's
the
back.
best part is we can hear no hype music
I know.
in our headsets.
It was really hype. You can believe it, though.
Dead.
I pressed all of my Carlos Mata buttons on my soundboard and then was playing the music. So it was super hype.
This is the way. This is the way. All right, so we got about a half hour left. We covered a lot of shit. I think the other thing that we kind of talked about that's semi-related to everything that we just chatted on is how I think our expectations have completely been warped now. Like, I want to get into DeFi and yield farming for like 1000% gain. Like our feedback loops are so short now that our expectations are, we have to be absolutely mooning, otherwise we're not successful. So right. It's especially with art too, I feel like all of these investments are very emotional. So if you can separate the emotion from it, you're well off. But with art too, I feel like such a deep connection with some of them that yes, I collect them and maybe I do intend to sell them or part with them in the future, but I also feel an emotional tie to them and I don't know when to break that. So I don't know if there are certain things that I guess I'm just thinking out loud, but I don't know if there's certain things that we can do to just be smarter about those types of investments. And maybe it's everything that you've already said.
I think it's a burden to have to like decide all that yourself too. Like I think that's like if I were to, like plug something, it would be like it doesn't have to be me, right? Just work with somebody who knows their shit and can help you make those decisions at a professional level. And because if you go to somebody and you say, hey, I have 95% of my net worth in crypto and 5% in fiat, and then someone like doesn't freak out and then just like wants to help you, then that's the right person that you should go to. But find the right person that understands where you're at, right? Like, and that can just help you make those informed decisions so that they can like hold you accountable. Basically, say, all right, we said we're going to take a little off the table, let's do that, and let's like bring it back to reality here. But also, like I said earlier, if you've got most of your other stuff in order, like if like you're doing well, like employment wise and bringing in money consistently, you're making your payments on everything, you're not going into debt, then it, and you're connected to these things like at emotional level that they actually intrigue you, then at the end of the day, like it can be a collection that you just enjoy. And if it appreciates, because it's also like that's what people are dealing with right now in the collectible card market, is it's called the hobby. That's like the phrase everyone uses, like hashtag the hobby. And people are always saying like, hey, this used to be just a hobby, that, right? Like it's not something we're supposed to get rich off of. So if you're here to do that, then you may have the wrong intention, and you're going to get burned one day or another. So yeah, I think it all depends on your purpose for what you're doing. Yeah, I don't know where I was going with that, but
that makes sense.
To branch off a little bit, first question, are you taking new clients? Are you planning to move more into this space from people like us? And then to follow that up, if not, then how do we find someone in our area who doesn't freak out? Because I've had a hard time with that being in Idaho. There's not really a big cryptocurrency scene up here.
Yep, that's a good question. So we are taking new clients. That was the major reason I left my old firm to start a new firm, was because I had way too many customers who just demanded things and not actual clients who I really liked working with. So we went from basically, I think it was around like 750 clients, and now we have right around around 80. And it's a much more manageable lifestyle where I can then pick and choose who we're bringing on as clients going forward. So we're still pretty picky, and people have to kind of fit a certain model of what we're trying to accomplish. And it's mostly just like people who understand the relationship of working with somebody like us, but also like they're just not total assholes. And at the same time, I would say if you're looking for somebody, look for somebody who is a fiduciary, meaning like they own an RIA like I do. And there's ways to find financial advisors through those networks. There's networks called NAPFA, N-A-P-F-A, or there's things called like fee only. So like that's the operative terms you want to look for are fee only fiduciaries. Those are the types of financial advisors you want to work with, because they're not making money on commissions or trying to sell you something. They make money on either a percentage of managing your money, or they just charge you like an hourly rate or a flat fee. And that's where you're going to get the most like unbiased and best advice, because they're just paid to give you advice. Whether or not you take it, that's up to you. And then they can help you do that if you want to. But that's someone who's not going to freak out. They're going to see it as either a fun project that's new to them, or they're experienced in that area and they know how to handle it, and then they know how to charge for that niche. And that's something we're hoping to get into. Probably not so much in the NFT space, because it's so complex to me at this point that I don't feel like we could ever charge for that advice, but more on the collectible side of things. And in cryptocurrency, there's becoming more ways for people like me to actually hold custody of some of those assets and help, buy and sell in regular accounts. I've in the works of setting up with like Coinbase Institutional. There's really cool company called On-Ramp Invest. They are a platform for advisors to custody assets, and that could be another call you could set up with them sometime, because I'm friends with the guy who has started that. If you ever wanted to talk to somebody like who actually runs that type of business. So that's areas that we're looking to get into, is working with people in this niche, because no one else really wants to, and they should.
That's the thing, right? Is like, so I know I can go get my taxes done somewhere, right? But like you said, everyone who I've worked with before knows just like, how much do you have in cryptocurrency, or like, what are you doing? And they don't understand. And then even more importantly, they don't care to learn. And that's fair, because it's so complicated. But as invested as I am, and I know probably everyone watching is, we need someone who's going to at least be interested to find some of the niches and some of the things to work around and ways to do things. And it's really difficult on that end to just, we all want an expert, but it just doesn't exist so much right now.
Yeah, and I think that a lot of this stuff comes with somebody who actually does it themselves. So I'm kind of like, that's the way I've built my business around, is like I'm kind of like a human guinea pig, and so is my wife. Like, she has every account under the sun that I've just like created for her, and she probably doesn't even know it. Just to learn how these things work, and I enjoy it too. So you have to have somebody who like is passionate about it as well.
Right.
Because there's a whole other side of crypto that really interests me, is the estate planning side of things and the privacy on cold storage. And if I have a client who dies and they've got all this money in cold storage, who's their dedicated person to figure that out, right? So that's something that we're going to start looking into, is being almost like not an executor of like a will, but also like we're the dedicated party where like we are the only other people who have those passcode phrases or whatever. I forget the vernacular.
Yeah.
But
Seed phrase.
Seed phrase, yeah. Where if that person passes away, their family comes to us, and then we know how to help distribute those assets, because that's a lot of planning that we do that no one's really worried about right now, because we're all young, and that's that's why topics like just like things like insurance or whatever, it's kind of in that category where it's like you should be thinking about it when you don't need it. But that's like a really interesting side of that space, where it's like, how do you pass this stuff on if you're not here, or what those types of things, and nobody knows how to do that right now.
Right.
So finding those people who are passionate about it and do it themselves, then I think that's where it's going to start. So I'd like to start building a community in the financial space of people who actually care about that.
That's a great idea. I think that's super interesting. I've honestly never thought about that before, but that's a big need in the space.
Yeah.
Also, have you thought any bit about yield farming and the DeFi side of things?
Yeah, it's funny. I was talking to Ryan about that before the call. I've tried to look into it a little bit, because that's something that I'm really plugged in with, the best bank accounts to open, the best like credit cards to own, the savings rates right now. I could tell you like off the top of my head every day, like which bank is paying the best yield, essentially in savings. But then yield farming is a totally separate entity that I need to learn more about. I'm interested in it, but I'm like really, really skeptical. Just knowing like the world of finance. The things that scare me is that they're not FDIC insured, which is like probably a good thing for the sake of privacy. But if something goes under and all of your money's gone, like there's no one to protect you for getting it back.
Yeah, it's just gone.
It's just gone, and it's risk reward. So you're still like, it's there's a reason why U.S. Consumer Bank is only paying like 0.6% a year on a savings account, is because like, one, they can back it, but also like there's no better place to park like safe money right now, so they can pay like a really low rate, but it's reliable, so there's no risk to it, right? Whereas with yield farming, there has to be a considerable risk. Anyone who says there isn't, like that, they're lying.
There's huge risk.
That's kind of where, that's where I'd like to understand how it works from a risk standpoint, because it seems too good to be true, but maybe it isn't. I don't know. If you want to give me like an easy brief right now, I'm more than happy to.
I mean, I don't know that much, because I mean, as complicated as NFTs are, they make a lot of sense to me, and DeFi gets more into the business financial percents, and I just get so lost in the sauce. But what I understand
is
it
there
is,
someone you guys follow that is, sorry to cut you off, is really informed in this area?
Dude, 100%. There's a YouTube channel and a Twitter and a website called The Defiant, and they are like the go-to source for all things DeFi. They do such a good job and such great content. I'll try and find a link for you right now, but essentially,
they're pretty entertaining too.
They're very entertaining. Essentially, DeFi is just like you get paid high interest yields to stake your money in these up and coming coins, to give them liquidity, and in exchange they give you crazy interest rates. But the danger is a lot of them are, I mean, they're up and coming coins and platforms and stuff, so they're not very secure, and you need to hop around to maximize your yields, and it's a whole new world over there.
Yeah, that does make sense to how that works. I wonder, is staking, like, that brings it back, like, is staking a taxable event as well? Like, I wonder if there's guidance on that.
I'm
not sure.
That was gonna be one of my questions, actually.
I don't
'cause
know.
I stake some.
Well, you're transferring it to a new address, so it would be
Right.
But it's not changing value. I don't know. That's help.
That's something we gotta dig into.
Well, because it's almost like it seems to me there's like margin trading seems similar, where you're lending your securities to somebody else, or like you're borrowing to invest. So for example, we have clients who have margin investment accounts where they can borrow against those accounts and use it for whatever, like they get extra money, but the money doesn't come out of the account, if that makes sense. So it stays invested, so you don't have to sell and realize taxes, but then you can use that as almost collateral to then borrow money for short-term purposes or something like that. So I wonder if it's similar in that.
Well, Avi is doing, in compound finance, are doing borrowing against your own assets too.
Yeah.
So they're formulating that in the new crypto world. So that's even more interesting to me, to leverage those platforms.
It's so crazy what's on the horizon. Like, it's crazy what's out there now, and just to think about what's going on now, and the fact that we're in like dial-up AOL times, and what's coming is the actual internet we know today. That's mind-boggling. And that's what makes me so excited that we're in this space, you know? Like, it just, sometimes we feel, I know for me at least, it's easy to feel like you're late on NFTs because we're in this bubble of everyone who's been doing NFTs. But it's so early. Like, everything's so early. It's insane.
This is I think, first time that I always feel like I'm behind the starting gun on things for whatever reason, like whether that's tech or just things that like pop off. And this is the first time that I feel like we're actually in it. Like we're in that starting line. We're running with those early people that are innovating. And I feel a little bit of the opposite. Like, I feel like, but you're also saying the same thing. Like, we really are that early. And it feels special.
Nobody knows anything about like people in real like I feel like I'm almost kind of like a good indicator of someone who has no fucking idea what you guys are talking about, but still knows 99% more than anybody else, like in my industry or just in my world, because I don't follow anyone on Twitter that is like that you guys do, really. But you see the same thing in finance, for example. Like, there's such a it's like really common on Reddit, forgetting like the term. It's kind of like a groupthink type thing where you just like, that becomes your reality, and then you all kind of and then it's like recycled, where it's everyone thinks the same thing and thinks that's the only way that everyone thinks, and then it becomes like a wake-up call when you're like, oh shit, no one knows about this.
I upvote that, good sir. Reddit gold for you.
I love Reddit. But yeah, that's like the most insufferable people on the planet as well.
True.
They're gonna come for you, man. Now they're gonna come for you.
Tips Fedora.
I wonder if, like, just to sort of bounce off of that for a little bit, like, if the institutions like Northwestern, I'm not like picking on anyone in particular, but due to their size, due to their tradition and history, if they generally set the standard for the way advisors approach things currently, and the independent thinkers are obviously the ones that are going there and, like you already said, like, be the guinea pig. But so long as Northwestern and those other traditional institutions have not bought into it or are not considering it serious, that means the vast majority of financial advisors, maybe even CPAs, are not going to consider this a space that needs the time and attention it deserves.
Yeah, yes, that's correct. Because it's not because they don't want to, it's because they can't afford to, like, they can't afford the compliance risk on that, where those big institutions are always going to be last because it's like moving the Titanic versus like a speedboat. Because there's so much at play there, so many people they have to manage, they can't catch up to like the legal requirements of like covering their ass for 10,000 advisors that work for them who want to talk about it. So their default is always no, like you can't talk about it. And that's the main reason why I left and went in an independent route, was because I couldn't even I wrote a couple blog posts, but I had to hide it essentially, and it was just about finance in general, but you couldn't even be caught like giving advice without their approval, and they
Wow.
you had to run it through their compliance department, and they never would have approved it. And I just needed like an outlet to vent on certain things. And then eventually like I got caught, and basically like I had to go through like probation. Essentially I had to like report all of
For writing a blog.
Yeah, it's crazy. And that's like, and they're pretty like laid back actually in terms of like in their compliance department. So things like this, places like that will never catch up because they can't, because their compliance is telling them no, like you can't do that. There's a risk involved of getting sued or of getting in trouble here because you can't give advice on things you're not qualified to talk about, because there's all the things that deal with licenses and stuff too. The reason like they just banned like TikTok creators from talking about cryptocurrency like today, I think, or yesterday.
Did they really?
So I didn't know that.
Yeah, it's like so heavily, there's so much risk there, like consumer protection, that they have to be mindful of. So
whoa,
crazy.
Yeah,
I did not know that.
So for me, like I am my own compliance department.
Yeah,
which is like probably terrible in itself. But it's, I can make the decision of if what I'm talking about is okay, and a lot of the stuff's common sense. But if you're working with, and that's not to say if you already have a relationship with a financial advisor at a Merrill Lynch, at a Northwestern Mutual, wherever it is, that they're not good at their job. Most of them like probably are, but they are held under these restrictions to like the lowest common denominator. So I had to follow the rules of the same rules as like a 22-year-old Chad who just came in and has no no idea what they're doing, because there's no way to separate like who can have a different standard essentially. So
that TikTok thing has me caught. Like, do you think that other platforms are going to be doing the same thing? Makes me a little concerned. Well, okay, because they can talk about stocks, right? Can't they talk about other things on TikTok? Why is it just cryptocurrency?
It's becoming an issue, it seems like, because they have so much influence over young people who can't make their own decisions. You know what I mean? And they just want to follow trends. So it's probably a company based decision that they made, that they're like, we're going to get in just like a shitload of issues with legally and people coming, like, we need to stop this. Where if like people on Twitter, that's a much more established base that people will come out and like, you can't get away with it much on Twitter, you know what I mean? Because people will come out of the woodwork and call you out. So I think that could be the difference there. But yeah, it's all company dependent. And it's if they're shilling like investment, that's a huge issue. Like that's a whole other topic of like personal financial advice that's given on like Instagram, Facebook, whatever it is. Like there's people who skirt these rules around. Like I had to take so many licensing exams. I have to pay so much money to stay current with like the SEC, the government. But because those people don't have those licenses, they can just give random advice that's best practices and there's no repercussions from it. So there's a very strange line that you have to toe. So
makes sense. Yeah, I'm just trying to make a save the kids coin and then take all the money for myself.
Fucking knew it.
Did you guys hear about that? That actually happened.
I knew it. Wait, what?
Yeah, so
you get a coin?
Yeah,
stole from people?
FaZe Clan?
Wait.
I did hear about that.
Yes.
Yeah, they made a coin called Save the Kids coin, and then they took all the money and didn't help any kids.
Amazing.
It's the ultimate troll.
Oh my god.
They get like suspended by
Oh yeah.
the phase or whatever.
Oh yeah, they're screwed. You can't really do that. Unfortunately, in today's social and political climate, you can't make a save the kids coin and then take all the money for yourself.
And not save the
Not a
kid.
good look.
Yeah, thanks, Obama.
Oh my god.
Um,
Well, hey, we're wrapping up here. So I've already put it in the chat, but if you guys have any additional questions to get to that we didn't cover, drop it in the chat. We'll see if we can get to it. I dropped Chris's social and website link again. But this was like so much information, man.
I'm gonna
feel like we're
rewatch it.
Wiped.
We need to rewatch.
Yeah,
You're dead.
I'm dead. The Adderall I snorted like 2 hours ago wore off.
Right at the beginning of the stream, you ripped it. We need to probably make some cliff notes too to just point out some important talking points.
I think that would be a great way to end the stream is so for someone who hasn't done any sort of preparation, any sort of planning, have just tuned into this podcast because we're talking about financials and just doesn't know where to start. What are your like first action steps for them to take to get this all in order?
Yeah, so I would, it's all just like organization. So whether it's like finding a resource like a spreadsheet to plug in, like the basics, like getting even more basic would be organizing your net worth, like just knowing where everything is in your accounts, like all of your bank accounts, investments in a general fashion, and your debts, and kind of lining those up, and then going deeper with whether it's crypto transactions for tax purposes or NFTs. Like I said, just start with July, let's say, or go back to, if you haven't done any transactions in July, go to June, and just get all of those laid out. Whether you write them down, it doesn't matter. Like like I said, I'll plug a basic Google sheet that people can use. It may not be the best, but it's a start just to show you like how you should be organizing these things, so that you can just keep doing it and create it as a habit. But it's hard. You got to really force yourself to do that. So I would just say get started with the basics, record things in it. Like I use Excel a lot, but I know some people may not as much. Sheets is fine too. So just start there and just start tracking going forward, but also just try it. And then the more you do, the easier it's going to be. But that's always my encouragement to clients we first start working with, is just get started with something, whether it's budgeting or investing. Just the more you just try and make it more basic, then it's going to be easier from there. So, and then because then you have something to build off of, that you can then turn it over to somebody like me and say, here's where I'm at. I started recording this stuff, and then that person can say, okay, that's a good start. Here's where I would make improvements on how you can do that, or I can take that off your plate. We have software that we plug in for those purposes, like for the net worth tracking, budgeting, that our clients use. And I'm trying to figure out a good way to include collectibles and crypto into that, but there's not many platforms that help provide for that now.
Yeah.
But just get a basic like assessment of, because you can't make improvements if you don't know where things are at.
Right.
And it's just so much easier to ignore than to actually buckle down and do it. But
so get over the fear. Get over the fear.
There's no just like switch you can flip. But
yeah, I think that, and this is super helpful for me, right? Because I am notorious with tax stuff and going into my fresh books and like labeling expenses, for not doing it. I know how to do it though, and I'll tell you guys what I should be doing. Is set every 2 weeks or at the end of every month, set a day, and Chris was talking about this earlier, where you just go through all your stuff for that month or for those 2 weeks. It really is not as daunting and as hard as you think it would be. And if you really need to, give yourself like a treat afterwards, like go get ice cream or something afterwards. Make it worth your while to keep up on it. And then what you want to do is look at all your expenses, all your transactions, and just categorize them, label them. And then to Chris's point, you take that to Chris or whoever you find locally, or or your CPA, whoever you're doing that with, and they will be able to look at it and tell you what they can help you with and what they can't. and then take it from there. Just take it one step at a time.
Yeah, and I would say don't get too caught up in like how you do it. Just whatever works for you is the best. Is like the best. Like if you write it down, but that makes you do it, then that's great because it's all about like how knowing how you tick. And I talked to for example, for me, like creating copy. I'm working with Ryan's girlfriend on creating more copy for our site, and she sets me up on Notion, and I'm like, can I just type it in Word and then just like send it to you? Because like I go on Notion and then I'm just trying to learn how to like create subfolders and then like organize it, and then I spend 3 hours doing that, and then I don't actually write anything. So I was like, can I just like type it out and then figure that? And it doesn't matter. She's like, yeah, I don't care.
That's the perk of Notion.
Yeah, right. So it's exactly. I'm like, this is cool. I want to just like make it super clean, and it doesn't matter. So just whatever works for you, whatever makes you get it done would be the thing that I would lean towards, because then you can bring it to somebody else and they can streamline it for you.
Mm-hmm. Perfect.
It's a good way to wrap it up.
Oh yeah.
Cool.
All right. How can people reach out to you, Chris? I know I dropped the links a couple of times, but what's the best way that people can find you and get your response?
I mean, Twitter is where I'm most active on social media, or just my email is the other way, just chris@iconocapital.com. I'll put it in the chat here.
Dope.
That's the best way. Oh, apparently I got to log into Twitch to do that, so hang on.
Let's send it in the Discord, or I can just do it myself.
We can type it for you.
Yeah. Or it's on my website too. There's like a
sweet
hello@iconocapital.com. That's the best way to get a organized response from me. Otherwise, Twitter you might get a little more degen chat.
And some people want that. I think I'll be hitting you up on Twitter.
Sure.
So those are the two ways, and I love talking about this stuff. So if it's anything big, small, and don't be afraid to ask.
Awesome. Thanks, man. I've learned so much, and I think that this is going to be super useful for everyone who sees it later, and then obviously everyone who's been here live asking their own questions. So can't thank you enough, and thank you, Rye, for setting it up too.
Yeah, thanks for having me, guys.
I mean, of course, it's our pleasure. I don't think there's been like a singular conversation like this that I've seen before about NFTs, and
not really.
I'm glad that we have this.
Yeah, there seems to be good blood in your guys' family, so keep it up. Keep it
We're
up.
just tricking you guys. We're terrible people.
Someone pointed out that they think I'm older, but I'm not.
Really?
That's my favorite when that happens.
What's the gap?
5 years.
Okay. It's probably the beard.
But it's the beard for sure.
Yeah.
Well,
The hair is
much
great
more
though.
scholarly.
Looks fantastic. Yeah, for sure.
Perfect.
Well, thanks for the time, Chris.
Yeah, thank you.
Good hanging, boys, as always.
Yeah. Ryan, do you have anything to
No, I have nothing.
Nothing to plug?
This was great though.
Yeah.
I definitely also learned a lot. And I still might avoid the government in a lot of ways.
Yeah, man.
We're
That's
live.
your
We're
informed
live
decision.
here on Twitch, where Ryan is talking about his future tax implications. I, for one, will be paying all of my taxes as accurately and as best as possible.
You heard it first.
Yes,
I'm the
Mr.
next
IRS.
one for to get audited.
They're coming for you.
None of this was financial or investment advice.
Yeah, I'm gonna make this a YouTube video and just put not financial advice just over the entire screen the entire time.
It's for the best.
Yeah,
It's for the
it
best.
probably is. Rye, do you have anything to plug?
Nothing.
Nothing?
Glad we have these chats
Yeah.
every week. There's always projects in the works, but
Yeah.
just grateful to be here, and thanks.
Yeah, I don't have much either, guys. So, what I will say is next Tuesday we have another Thunderdome with George. It might be, I don't know what kind of Thunderdome it'll be. We'll see what George has in mind. But judging that on Thursday, Tuesday we're announcing, and Tuesday we're also doing news and I don't know, maybe marbles if you guys are good. I'm now becoming a parent of anonymous stream dwellers. So keep an eye out for that. Thank you guys for coming. Thanks for everything. Thank you, Chris and both Ryans. And Yeah, we'll see you guys next time. Peace.
Have a good weekend, guys.
Thanks, guys.
Yeah, see ya.
And now, folks, it's time to say goodnight. We sincerely appreciate your patronage and hope we've succeeded in bringing you an enjoyable evening of entertainment. Please drive home carefully and come back again soon. Good night.